Hi, it's 9:34 p.m. Japan time, May 26, 2025. I have been down with a cold, so I've been in bed for a while. Let's take a quick look at today's market. The Nikkei closed at 37531 yen, up about 1% from the previous day. The volatility index is at 24.41, still hovering in that 24 range. The PL is 15.46, which gives us an EPS of around 2427 yen. There was not a big change overall today, but on Friday there was news about a 15% tariff on Europe, and the Nikkei dropped to around 36,400 yen. But then this morning, Trump mentioned the tariff would be delayed, and the Nikkei bounced back to about 37,500 yen. So compared to Friday night, we are up almost 1,000 yen. Right now, the market is around 37,600 yen, and it feels like it's moving strongly. But one thing that catch my attention is that is total trading money. It was only 2.5 trillion yen today. Nikkei Linigo stocks, which is quite low compared to recent days. Even though 2319 stocks rose, the volume was not that high, and that could mean many investors had already taken their positions, so we should be cautious here. The US market closed today for Memorial Day, so it's unclear how Japan will move next. But US futures are still trading, so we'll have to watch how that affects things. Overall, many investors might be feeling relieved by today's rally, but I personally remain cautious, especially when I look at EPS momentum. To be honest, I'm skeptical about any real upside from here. To be honest, I'm skeptical about any real upside from here. The market went up in 2024 because EPS kept crumbling, reaching around 2550 yen at its peak. But now EPS is gradually trending downward, and with Trump's tariff in the mix, it's hard to see a strong upside from an EPS standing point. Another thing, Japanese government bond VIX rose to 5.19 today, and the 30-year yield is still around 3%. This tells me that there's a bit of tension building in the bond market. So even though stocks look lively, the bond market seems uneasy. To me, that's something worth paying attention to. I don't think we should be too cheerful about today's rally. And there's also news about unrealized loss on some bond assets held by regional bank, and this reminds me of the risk IMF pointed out in non-bank institutions. It might be wise to keep a close eye on that too. Personally, while I was resting, I watched the movie Margin Call. It's based on Lehman Brothers, and in the story, a young analyst discovered the risk, and the firm take action to survive. It reminded me how powerful modeling can be. That was the theme of my weekend. That's all for today. If you like this episode, please go along up it on my contents. Follow me. See you tomorrow.